Committee on Tuesday, 25th of March, 2025. Those present in the room, if the fire alarm sounds, please leave the building by the nearest exit. Make your way to the fire assembly point of the car park. The agenda papers and other relevant information for this meeting are available for public viewing on the Herefordshire Council website. And as I've said, the council is recording this meeting and this will be uploaded onto the Herefordshire Council YouTube channel shortly after this meeting. So there are microphones in the ceiling. We probably need to speak up a little bit. I certainly need to speak up a little bit more. If you have a question, do raise your hand and I'll do my best to identify you and we deal with questions. Please make sure that mobile phones, laptops and other devices are turned to silent. We have some remote participants. Can I request that you use the raise hand function within your system if you wish to contribute and to introduce yourself when called upon. And I'd like to welcome Grace is in the room. Grace, thank you. From Grant Thornton, is that right? I hope I've got the right firm, thank you. Yeah, we'll deal with you. I think yours is the first item. So, yeah. Any apologies been notified to the clerk?
No apologies, Chair.
Have any substitutes been notified?
No name substitutes, Chair.
Declarations of interest. Do members have any interest to declare on the items in the agenda? Of course, you're all interested, but it's a matter of whether you have to declare an interest. No interest. Thank you. The minutes of the meeting held on 28th of January are included in the agenda for approval. Deal here with matters of accuracy. No matters of accuracy have been notified to the monitoring officer. So are you content that I sign the minutes as an accurate record? If you can show of hands. Thank you very much. Item 5, questions from members of the public. There are none. And 6, there are no questions from councillors. So we move straight on to item 7, which is the external auditor's draft annual plan. Grace is here from Grant Thornton. I don't know whether you want to make a little introduction, Rachel, but we're just very grateful that you've agreed to again be at the forefront of audit accounts being signed in the coming year. We look forward to having a second year of that, and Rachel, I know, is working very hard to achieve that as well.
Thank you, Chair. So we've got the external auditor's draft audit plan for 24-25. So this sets out their plan to complete the audit of our financial statements for the year ending 31st of March 2025. The report highlights the key risks and some sector information, as well as some important information around the team and our materiality levels in those areas that they will test in greater detail. I'll let Grace talk us through the report, but I just wanted to highlight that for us, this is a consistent audit team this year, which we're really grateful for. In terms of that cumulative knowledge build up, the way that Herefordshire do things, the way that we account and our working papers, I think there's real value in having that consistency. We had a great team last year, and across us we worked to achieve a really good outcome for the council in providing that valuable assurance to you and to residents. And we are already making good progress, I think, in terms of this year's accounts and the audit testing. So with that, with your permission, Chair, I'll hand over to Grace.
Thank you, Rachel. Yes, our audit plan is on the agenda today. As Rachel said, our planning work's progressing well, and we're actually working with the finance team to do as much early testing this year as we can as well. So we've got a list that we're working through to try and save us when we get to that final account stage in the summer. I will take the report as read, but there are a few key things I'd like to highlight. So the first of those is on page 36 to 39 of the report pack. So this outlines the significant risk areas for our audit. These are consistent with what you would have seen in prior year, and it covers the presumed risk of management override of controls, and then the valuation of the pension fund liability, property, plant and equipment and investment properties. You may remember that IFRS 16 is another area of focus for us as well this year. So it's not a significant risk, but it's a new standard that's been implemented for 24-25. So this is something that we'll check the completeness of the transactions, and if it's material, then we'll do further testing. But I think currently we're not expecting that to be a material figure. Our materiality is outlined on page 45 of the pack. So you will note that this percentage applied has increased since the prior year. This is due to an update in our internal guidance, and we've applied the maximum 2% as we don't consider there to be any specific risks in the control environment at Hereford. Our value for money assessment is outlined on pages 55 and 56. So at this stage, we've identified 3 risks of significant weakness within the financial sustainability and 3 E's criteria. So this does link back to the prior year recommendations that were raised around the budget gap and pressures within children's social care and with the DSG. So these will just remain under review, and we'll follow up those recommendations as part of our work and report that alongside our audit findings report, hopefully in September. As Rachel's already said, we do have a consistent team in place to deliver the audit, and the logistics and the time frame is outlined on page 58. So we can confirm that the audit is going to be in phase 1 audits, running from mid-June until late September, hoping that we can have a timely sign-off again of the accounts towards the end of September, early October. I'm happy to take any questions on the detail if there are any.
Robert, yeah.
Page 56, the risks involved with the relation to the progress in children's social care services. Did that take into account the improvements noted by the Ofsted and the Children's Commissioner?
It does. So I think at the point that we raised the recommendation last year, the report hadn't come out, but it is something that we will stay on top of as we do the value for money work this year. So
I'll think back to a yellow.
yes, so it is tied in with external regulator findings. So once that clears, that is normally the case. So, yeah, we'll follow that up.
Thank you, Chair. Mark. So Grace, on page 14 of your pack, or 36 of our complete pack, is significant risks identified. And the significant risks is management override of controls. Yeah?
Yeah.
And on the planned audit procedures, they review of unusual significant transactions. How are those brought to us?
So as part of our planning inquiries, we will inquire of the chair of the audit committee and management to see if anything has happened in year that we would pay particular attention to. So that's how we deem if there's any significant risks. And then if there's any risk then that comes out from our testing, so review of our journal transactions, we review the IT control environment and any biases in estimates. We will then pay particular attention to those, but at the moment there's no specific transactions that we're paying close attention to.
Thank you. And the second thing was, since we've got Peter here as well, he'll probably be aware of this one. I don't recognise you mentioned this software program called, is it Inflow? Inflow.
Yes.
Is that new for you, or have you been using it before?
No, we have used it for a number of years now.
No,
so
okay.
It's yes, it's our audit software that we use. Well, it's a sharing platform really, so secure sharing for any working papers and requests, so that we can track the progress and the finance team have access to the same thing as we do. We also use it to analyse the data, so the general ledger download is uploaded into Inflow, and that's how we do it.
See how you did that. That's quite an accomplishment. So you've done this before, you've imported the general ledger before,
yes,
and you can analyse it. So, and you're not changing that system. It's going to be the same system used as last year.
Same system, yeah. So we can do analyse, we can look at trends, and that's how we then focus on the risk areas in journals, rather than doing a random test. It is specific to the risk areas that are flagged from that system.
If I can just add as well, it's a really effective audit tool. So when I am managing the audit on the council side, we use this as a consistent tool to consider all of the queries outstanding at any point. So in a weekly meeting through the finance team, we would look at the inquiries that have come through, how many we've responded to, and it helps us manage our workflow. It's also efficient because it means that instead of, 7 auditors each sending 7 people in the council different emails and just kind of trying to keep track of the email traffic on that. We've got it all in one place. And as Grace said, it's a secure way for us to upload sometimes sensitive information without having to redact it or worry about the kind of data integrity.
So that means that they don't have to have access to our accounts. They're accessing a copy of
No, they're accessing the accounts, and sometimes to ensure that they can verify that it has come from our source system, you will observe us running a report and that download. And I think this is probably one of the developments of kind of the virtual world that we operate in now. Historically, an auditor would have sat next to you and watched you or observed you take the file off the shelf and show you and prove. So that visible, that kind of observation of running of a report, and you timestamp it, and there's lots of checks that you undertake at your end to make sure that it actually is derived from the ledger that informs the financial statements.
It's not unique to local authorities and not unique to Grant Thornton. It is standard practice with auditors across charities, across industry, manufacturing, retail. You use a portal to log the reports, the accounts, the comments in to make things more efficient. It's absolute normal now, everywhere you go.
Chair, if I can enter, and of course the unit for business world that you reviewed is our current on-premises version, and we're in the process. Literally, we've just signed off. I think in the last 2 weeks to go into the update to the version on the cloud.
Yeah,
which will make things a lot easier.
Please do. Yeah.
One, you mentioned IFRS 16, which is leases.
Yes.
What other changes in IFRSs are in the pipeline that we should be aware of and maybe planning ahead and considering?
Nothing that I'm aware of coming out in the next couple of years. This year,
Nothing happens quickly.
ISA 600 has also changed in groups this year. So that's just the way that we correspond with any component auditors, and it's more change on our side really of how we record down in our audit file.
Nothing on recognition of income or valuations.
Yeah.
And just to provide assurance, my team regularly throughout kind of financial year, and Grant Thornton offer training as well in terms of, so if there's a new standard, we're signed up to SIPFA. So we have 20 places on training courses throughout the year, and we'll focus that on a new accounting standard. And then the Grant Thornton training is understanding the audit approach to testing the standard. So that helps us in terms of that evidence build.
But I know what's coming at you.
Yeah, but IFRS 16 has been in train for pre-COVID. It was supposed to be introduced in COVID. They thought it was too difficult. The audit backlog then had an impact, and they didn't want to put pressure on the preparer of the accounts. So I'm not sure anybody really thought it would ever be implemented, particularly not this year. But we've been preparing for it and ready for 5 years now. So we are, this is probably the standard that most accounts teams are absolutely ready for.
My second question is, how long have Grant Thornton been the auditors? And do local authorities have the same requirement to change because of international rules about changing auditors and complacency and being too embedded?
So we are signed up to PSAA, which is the Public Sector Auditor Appointment. I got that the right. So we opt into that, and we opted into that a couple of years ago here. We could choose to go outside of that framework and procure a different, more local firm. And we chose not to, and that came to this committee, I think, to make that decision. So through the Public Sector Audit Appointments, we've got the protection of that framework. Grant Thornton are the market leaders in public sector audit since the abolition of the Audit Commission, and you took the lion's share, and with that, the lion's share of the expertise and qualified audit teams. Public sector audit is niche, it's unique, and so for us, we will review that at the point where the PSAA timeline comes up, I think in a couple of years.
Yeah, the 5-year contract started last year, the current framework. So.
And I think best practice, if you don't change your actual auditors, you have to change the leads.
That's correct. Yes, it's a 5-year cycle for engagement leads, 7 years for managers. So, yes, that's advice.
2 more hands. Aubrey.
Yes, thank you, Chair. To go back to management, significant risk management overrides. Does this imply deliberate overrides or accidental? Or is it mainly down to these journal entries that aren't properly supervised?
So it would cover both, but it is a dictated risk, so it's one that we can't rebut. So in ISA 240, we are required to have this risk on all of our audits. So it's not saying there's a higher risk of it in Herefordshire, it's just one of those risks that we have to have across the board. So it's just a presumed significant risk.
Yeah. Yes, so our chief executive is not overriding everybody.
Don't think it's allowed in the ledger. He doesn't have access to the ledger.
Yeah, only just a couple of little points, really. One, is it 100% audit, or do you each year do a percentage of all the things that go through the council?
So it will always be on a sample basis and based on our materiality level. So we only look at things that are above that materiality that's in the
Right, okay.
report. And then we do sampling then on those transactions. That is obviously there could be hundreds of thousands of lines in an operating expenditure listing, for example, and we'll just pick a sample of that based on the risk or the value of those individual items.
Yeah, and on the back of just a firm that's just gone through a food audit, and the standards change every year, and if you pass it, then they want to increase the level. Is this a set standard, and how much notice do the council actually get if you're going to be asked for even more things to prove?
So I think that there's a routine set of audit procedures that we are well rehearsed on, and we provide evidence. I think you can't give too many tricks away, but my experience of being an auditor is that there's a focus of professional scepticism each year to keep us on our toes. So obviously, if we know that you're always going to test this particular balance, it could be that the council finance team prioritise resources and expertise in that area and make sure that's our strongest evidence. We do that across all our balances because that's the quality of the expertise that we have in the finance team, as you'd expect. But you still like to introduce that element of, I think it's called professional scepticism.
Yes, yeah. So yeah,
A bit of a surprise.
yeah, different things, and also the expectations of our regulator, the FRC, changes as well. So even though there is that baseline of standard procedures, the ask has got quite a lot more of us as auditors over the last few years just to make sure that quality bar is raised. So that's why there was the backlog. One of the things that
So it's just in auditors, really, isn't it?
Yeah.
Auditors.
I think you called it a few years ago, well, the sector called it raising the bar, and it was literally, here are the standards, and surely we should expect that of public money. We should expect the bar to be high and more accountable to residents and taxpayers.
Grace, as an auditor, you're not just, we're not your sole client. You've got a whole group of local authority. Well, I know I'm always interested to see the bigger picture somehow, and whether you have any sort of comments that might help us as you go around and you see issues in councils and maybe talk to government. I mean, what sort of issues I think we all know what they are, but there may be some which you bring out. So a bit of kind of free advice from you about
Nothing's free, Dave.
give advice, but for the context. So I think you are in a very positive position in Hereford, and not just on the audit side in terms of timeliness. You were one of 3 that were signed off by the end of September last year across the whole country, and also you would have seen with the backlog and the 2 backstop dates that came in to clear prior years, there are so many disclaimed and qualified opinions off the back of that, and obviously you aren't impacted by that. And I think if you look at the wider sector as well, especially in the value for money sphere, there's a lot more statutory recommendations, public interest reports and things coming out, lots of stories hitting the news, and obviously you're not in that position. We'd consider you quite low risk when you compare to others and what you're seeing in this region and nationally, really.
and do you see any impact of devolution, also the changing to accounts in the future, perhaps with the government consultation and the new minister? I mean, what's he sort of driving, and is he influencing your work?
Yes, I think devolution and local government reorganisation is definitely one of the things that's top of our agenda at the moment. There's quite a few councils that have gone through it already, and that's causing issues for various reasons. And obviously with the drive to do more of that, it will be an impact on the audit, and especially the value for money side, where we're not seeing some of those benefits that were promised coming out, really. So, yeah.
That's a surprise.
You're involved in some of the counties where all the district councils are disappearing and they're all going to become unitary. I mean, that must be an absolute nightmare for systems and everything else.
Yes, I was involved in Somerset Council, which has recently merged. That was 23-24 was their first year as a unitary, and they had a disclaimed opinion because the accounts weren't pulled together in time. So that's one example.
They're increasing their council tax by more than the 5%, aren't they?
Yeah, there's a financial emergency there that's been quite well publicised as well.
Yeah. Well, that's very interesting. Um,
Can I ask another
Yeah.
question? Over the weekend, there was quite a bit in the press about the number of local authorities that are likely to go bust due to the increasing burden of send.
Yeah.
Where are we sitting? Do we have any risk, unidentified risk on that?
So it's one of our key financial risks as identified in the 25-26 budget and also the medium-term financial strategy. So Herefordshire historically has been in a really good position with our DSG deficit that's within the high needs block. So 2 years ago, our overspend that we carry as an unusable reserve on the balance sheet was 1.1 million. At the end of last financial year, it was 6.1. Our overspend in this financial year is 11.1 million, so that will increase that cumulative deficit to 17 million by the end of this financial year. For context, that we're in the well, from a council perspective, what that means in year is that's real cash out of the door. So there's a treasury management consequence to that because we are essentially using our overdraft to fund that expenditure through our schools. The wider picture is about what's within our control and what's outside of our control. And we monitor that spend, working closely with DFE and finance and service teams. And we have what's called a DSG, that's Dedicated Schools Grant Deficit Management Plan. Now that's about what measures we can implement locally to mitigate and contain that overspend, but essentially at the core of the problem is a lack of funding. So funding has not caught up with demand or
The
expenditure.
demand is
in this area.
increasing.
And
That's
the extrapolation from past experience to future isn't possible because it has just gone
So our
exponential.
Yeah, our main driver for the overspend in 24-25 is the number of independent school places we've needed to seek, with a 68% increase in year. So there are some things that we can do locally. We can look at our sufficiency, we can challenge spend, we can look at cluster models, and we're working with the service to do that. But it is a council risk. And whilst historically it has been a children's issue, it's now, because of the threat to our financial sustainability, a whole council issue. That said, nationally, I think it's an £8 billion deficit. So one of the key MHCLG agendas this year is on reform of SEND and looking at funding, but also eligibility, and addressing that. It's a problem that needs to be addressed at source rather than us papering over it.
So it sits outside of our balance book, we're aware of it.
Yeah.
But that ability to sit outside of balance book ends on the 31st of March 2026. So the pressure is on MCLHG to address this and hopefully not just kick the can down the road. Effectively, for us, if we had to reconcile that and actually it became real, then effectively our reserves will be hit by 17.1 million. That will hurt us, but we will still be capable. Other councils, it will take them down.
So we're monitoring the level of that deficit, doing everything we can to contain, considering how we use the capital programme to address what is a revenue budget pressure, but also keeping an eye on our overall financial sustainability through the reserves. And we monitor those as part of our budget monitoring to consider the DSG deficit in context of those reserves. But essentially, we will be engaging.
What do you believe we're on the better side of the?
I don't think that. I know that we've looked at this in context. Some of our neighbours are in the, I think, yeah, they are in the, close to hundreds of £1 million on this.
Good.
Sorry, if I can. So as we were saying, so we're 17.1. Our reserves, I think, was 71 last time, I think it was. So take 17 away from 71, we're still okay. As Rachel said, some of ours in the local area, Shropshire, etc., when they're in the £100 million and they're already running a deficit.
Yeah.
If that becomes real, then effectively they're no longer valid. They have to submit their 114 papers.
Yeah.
And we're not anywhere near that.
Robert, we've accidentally moved into this, quite right, Kerry, so it's a big risk. I don't want to dwell too much on it, but Robert, as you got a quick question.
I was saying that this was looked at extensively in children and young person scrutiny and the reasons behind. And so I'm sure the accountants know that as well, what's causing this. And it isn't really any failings within the council. It's that simply the ability to identify SEND people has improved dramatically. So people who were not considered on the autism spectrum, for example, 10 years ago, they now would be, and they get treatment and they get help and they get money that gets spent on them. So that's well known, and I don't think we've not identified any problems within the council's way of managing it. So that's a relief at least. And it really has to be central government that got to help us sort this out.
Yeah.
Aubrey, do you mind if we just move on?
Yeah.
Grace, thank you. The recommendation in this report talks about the committee determine any recommendations it wishes to make to maximise the value of the external audit process. So can we just for a few moments explore whether there might be any added value which you can deliver to find out whether the committee thinks there are. So the first one is I seem to remember last year as part of your programme, you looked at the deliverability of savings in the budget. Now, are you going to be able to do that again this year? Because I think that's a really valuable thing for us as a council to say, yes, you looked at it, yes, those savings are deliverable.
Yes, that will form part of our value for money assessment, and that ties into the risk of significant weakness around the budget gap and the MTFS. So that will be an area of focus that we'll do additional work on this year because of that risk. So yeah, that's something we'll report back. That'll be in our auditor's annual report on the DFM for September.
And that will be what, September, which is only halfway through the year, so it's very helpful. The second thing is, I think there are question marks over the value of your auditing the pension liability when those accounts are already audited. So perhaps you might. I just like to explore why you're generating value for us by spending a long time on those figures.
So there's two different elements really of the pension liability work. So there's the elements that are within the just the individual council. So that will be looking at the assumptions that the actuary uses to inform the estimate. And then we rely then on the pension fund auditor for pretty much the rest of it. So that's the value of the asset, the value of the liability, and any member data work that they do. So it's actually saving really, because that's only done once at a pension fund auditor level rather than at each individual council. So we write a letter to the pension fund auditor, which is also Grant Thornton for Worcester Pension Fund's case. We say, we need this information. This is our materiality for Hereford's audit. Please could you report back if there's any issues? And then that's the letter that we get normally quite late in the process to see if there's anything we need to follow up locally then. So it's basically saving that being duplicated across all of the councils.
So it's a big number, but it's in proportion to the amount of time that you spend on it is relatively little really.
Yeah, so we rely a lot on that letter, and it's just the locally controlled elements like the assumptions and things that we do individual work on.
Fine. And the third element is you know, I think it's really valuable to us that you do things on time, which you have done, because it enables that, you know, when the audit's finished, then Rachel and her team say, okay, well, we put that to bed now. We can concentrate on the budget for next year. And actually the first has to be dropped before the second can. So, you know, you do add value, I think, in that. I don't know how the councils really manage when they're spending years looking over the past few years. I mean, it must be an absolute nightmare. So I think that's an area where you are generating value for us. Thank you. And I don't know whether anybody else has had a little bit of time to think about what other ways in which the auditors might add value. No, there are a few hands.
Can I just mention that as the delights, one of the delights I have as the cabinet member for finance, I sit on the Worcestershire Pension Fund, and last week was just the valuation. The auditor came out with the valuation and talked us through. The main impact will be the contributions. Of course, the balance is trying to get that all at the right level so that actually the fund continues to grow. So that's just gone through for Worcestershire at the minute.
Okay. Good. The recommendation here is that the proposed external audit annual plan is approved. Appendix A, really happy with that. Show of hands. Thank you very much. Thank you, Grace.
Thank you.
Thanks, Grace. Number 8, internal audit update. Rachel, you want to introduce this or go straight to Amy? Amy, please do.
Thank you, Chair.
Just good afternoon to the committee. So first of all, I've got the quarter four internal audit progress update for yourselves. The agenda item starts on page 75 of your agenda pack, but I just wanted to draw your attention that the report is in a supplemental pack, just to give you all time to get that up so you're ready. As I normally would, I was going to take you through the key information from my side and then give you an opportunity for sort of discussions and questions at the end. Before I did that, I have asked my team to join today virtually. So we've got Josie, the principal auditor, and Ravi, the senior auditor. Just an opportunity for the committee to see the team and know that there is more than just me doing the work. And going forward, I am hoping that you'll see more of the team. When we bring the lower level assurance reports to committee, I'd like the team to be there to answer any questions you've got and provide that detail.
Take the flag.
To provide the detail that perhaps I can't. And it's really good experience for them to have interaction with committee and possibly see how their findings and their work comes out in this sort of forum, if that makes sense. I know I found it useful when I was sort of developing through my career. We are also holding a vacancy in the team at the moment, and I'm doing interviews for that next week. And at the moment, that's being backfilled with a contractor, so there shouldn't be any impact on delivery of the internal audit plan. So if I start with the key findings then that I'd like to bring to your attention. So we've got no high organisational risks in this progress report, no limited assurances or no assurances, and no priority 1 or 2 findings. So nothing really of significance to report to committee this quarter. Pages 5 to 9 demonstrate the activity of the internal audit and the status of the audits. So you can see we've got 2 audits completed since the previous progress report. We've got 15 in progress, with 3 of those at report stage. We have had some delays in finalising some of the work this quarter. I think that's a bit of a twofold process. One is the recruitment of the team and getting that team sort of embedded on our end. And the other, I think, is officers. It's a very busy time of year, so just trying to get that engagement to get some of those reports finalised. Although since I wrote this, the debtors report has now been finalised. So there is movement, and I am hoping that in anticipation of the annual opinion, at least sort of 13 of those 15 that we've currently got in progress will have moved through and feed into the annual opinion. Your risk coverage is shown on pages 10 and 11. I did decide to take out the coverage of the current corporate risks. We've talked extensively in committee about how that is underway, and I know we've got an agenda item later around risk management. So I've shown you the coverage against sort of swaps, top 10 risks. What I'll do then is, once the corporate risk register is finalised, I will go back to our rolling plan and I will map the future audits to the risks, identifying any gaps in coverage, and then go back out to the key officers in the council, senior management, and sort of determine whether we need extra audits or there may be sufficient assurance from other sources. Action tracking is on page 14. We're still tracking the actions. It's still successful. We've closed off another 5 since the last update committee, and none have had revised timescales in this quarter. The actions that remain at 91 plus days, they're very much on my radar. We've got a couple in foster placements and a couple in ICT, and I'm working with officers at the moment to close those off. So the aim is by the annual opinion that 91 plus days will be at 0, and then that's that backlog cleared and we can sort of move into sort of business as usual. And then finally, just to touch briefly upon the feedback scores, and that's on page 13. So after every audit, we issue a feedback questionnaire, and at present that stood at 100% the score. That was all I had to say for you, Chair, so welcome. Any questions?
Any questions?
Yes, Chair.
Well, Mark, yeah.
Thank you, Amy. On page 6 of the supplement, there's the in progress audit.
Yeah.
And you've got two rather enigmatic ones called Audit #3772 and Audit #3 something else. And those are both marked as type of work investigation. So first of all, just to explain a bit about investigation, and is the audit, the second one, I could see if I went into in audit book, if I drill down on 3749, it seems to be about major tender evaluation. Is that relating to our change of public realm contractor? Is that why that one's there? Because I was trying to figure out, are you doing an investigation on that?
Answer that question, no, it's not about the
Okay.
public realm contract. These are two pieces of work where Rachel has oh, sorry, the word has completely gone from my head. Approached us, sorry, approached us to do a piece of work. The investigations at the moment, until we sort of establish and get into that and what do they look like, just to the sensitive nature of what Rachel's asked us to look at.
So they're confidential.
I would say so. They may start confidential, but then as the journey progresses, it may not need to be confidential. I hope that makes sense. So that Rachel might have concerns in an area, but when we actually do our testing and do the, gain the evidence, it may be that there actually is no cause for concern.
I think the one that's final report of 14th of February mentioned, that's in sort of final draft form, and it should hopefully be available for the next meeting of the committee.
Rachel's finalising the comments and the feedback at the moment.
Yeah. And they're not are they things that you think we should be concerned about, or
At this stage, I've got no sort of significant concerns. And then as part of finalising those reports, if it's something that needs to be brought to committee, I'll of course do that.
So follow up on that, thank you, Chair. Follow up on that, on page 8, on the future proposed audits, you've got, and I mentioned this in the briefing, major projects, specific project to be decided or to be confirmed. Could you just explain how you're going to confirm those, or how those are selected?
I can. Thank you for your question. I think that's been put in there as a bit of a placeholder. I think we've talked in the past at committee around projects, and having assurance around projects is useful. Having it perhaps in the beginning stages, not the end stages. So that it's a little bit of a placeholder. When it comes to determining perhaps what project or projects we look at, that will be done on a sort of a risk-based approach then. So we'll involve key officers and have a look at reputational damage, financial damage, the size of the project, but it'll be done on sort of a risk base so that the audit is adding the most value, really. And my preference would be that rather than sort of taking one project and pulling it apart in its entirety, I think perhaps focusing on a risk in one project might not be the same risk in another project. So I think having that risk-based approach so that the scope is right and adding value is the important bit.
Just to clarify, does that mean looking at that part of the project, which is the risk, rather than the whole project?
So, our the internal audit resources aren't sort of infinite. So I think having that risk based approach means we're looking at the key areas first, and then through sort of the way I see it being affected is feeding back to senior management then and making that sort of judgment as to whether actually that's quite a significant finding, right, let's do a bit more, or, actually we'll take that on board and we'll actually, perhaps implement an internal review from that. So I think it's that sort of constant feedback to senior management and making sure that the scope is risk-based. So, because we could audit forever, couldn't we, on one topic? So I think
Yes, it's a matter of making maximum use of your time and the money that's being spent to get at the key things, yeah. Okay, thanks.
So I think we can look forward to the next meeting when 10 or 12
It'll be quite a
audits will
meaty
be completed, and then some of these will be moved from where they are. And it's not just the red ones which you'll be looking at. I think we talked before about some of the green ones become important, and you need to be working on those through, otherwise they just get left.
Yeah, no, it has to be quite a dynamic approach, and regular meetings with the senior managers, the corporate directors, is really important to make sure that as something's sort of coming through, that we're that we're adjusting. We did talk, I think, at the last committee about perhaps another column in here around timing. So you'll have the risk priority, but also the timing. So for something, for example, like risk management, for me at the moment, that would be a high priority audit to do. But due to the processes only being recently embedded, we won't do that for a little while. So I think that extra column will just allow that sort of double view to it. But there's just a little bit I need to do in the background on our audit board system to facilitate that. But hopefully for the next meeting, we'll have those both columns.
Any more questions? Amy, thanks. So that's just for noting. There's no need for a vote on that. We'll move on to the next. This line. Internal audit planning paper. Amy, it's yours as well.
So I wasn't sort of going to go through this one in too much detail. I'll sort of take it as read, but just take you through some of the key aspects. So this internal audit planning paper outlines to the committee the approach to be taken in terms of planning for 25-26. Sort of recognising that local authorities are working in a very fast-paced, changing environment, which means that our work needs to adapt, reprioritise, shift focus to keep up with the local authority changes. And make sure that we're supporting the council by making sure our work aligns to corporate priorities, the delivery plan, the aims and objectives, and of course, the key risks. So I'm proposing that we continue with the rolling approach that we used last year so that we can keep that sort of dynamic approach going. As I said in my Q4 progress update, there is some work to do once that corporate risk register is finalised. I think I just need to do a bit of remapping and make sure there are no gaps in the rolling plan to make sure that that rolling plan provides the coverage sufficiently. So I'll do that alongside Rachel and go back out to the directors and key officers. And then moving forward sort of into 25-26, my aim is to embed the process whereby we're meeting regularly with the DLTs, go into the DLT meetings, and there are a couple of officers I meet with outside of that, the monitoring officer, that sort of thing. So we can discuss emerging risks, any areas of concern they've got, and then just more general opportunities to enhance governance, risks, controls. That's really well established in some of the areas of the council, but I would like to see that sort of done a bit more consistently. So that's my sort of aim, to get that rolling planning approach done and get that our audit plan sufficiently sort of good coverage of the council's priorities and risks. So, and apologies if this was confusing. So although this is the planning approach paper, the rolling plan is in my progress 4 quarter update, or you can use the audit board link to see it in its full detail. Just wanted to draw the committee's attention to our external quality assessment, our EQA. So SWAP's subject to an EQA every 5 years, the last of which was done in December 2024. So this confirmed our conformance with the 2017 International Professional Practices Framework. Moving forward now, we are working to the new global internal audit standards. So the EQA that we'll be preparing for next will be to the new standards that have been introduced effective from April. And I am hoping to bring committee some information, a little bit of a training session on those new standards and what that means, what changes that's going to sort of bring about. Finally, then we've got the internal audit charter. It's quite a lengthy document, so I definitely wasn't going to take you through this sort of section by section. But in summary, the global internal audit standards require the use of an internal audit charter. They define it as a formal document that includes the internal audit's functions, mandate, organisational position, reporting relationships, scope of work, type of services, and other specifications. For me, I see that as sort of like the blueprint and the foundation under which the internal audit activity sort of operates then. And if that's okay with you, Chair, I'll hand over to questions.
Is this a new document? Or?
No. So the committee are bought the charter every year. We didn't bring it last year, I think in anticipation of the new standards. And then I think there was just a bit of delay on our end in finalising that document. So last year, I think we just rolled forward that we would operate under the one that was brought to the committee the year before, but this is a new document to reflect the new global internal audit standards that we're working to.
There's nothing Herefordshire specific in this Finance Charter. Is there?
No.
Any questions, anybody? No? So just looking at the charter, it does, it talks about independence of the chief audit executive. Says they will be positioned at a level in the organisation that enables internal audit services and responsibilities to be performed without interference from management, thereby establishing the independence of the internal audit function. And Amy, you wouldn't be sitting there asking it is to be signed unless you felt that was the case. So it's a comfort to us that you're kind of embedded in the organisation, but also given pretty much free rein. Which and I think from the conversations you and I have, I think you're able to go wherever you want in the council. There are no sort of, and you mentioned thrive, Rachel. I think part of it is openness, and that's epitomises the function. So
no issues from internal audit points of view in terms of getting information or no, not at all.
Yeah. Yes, if you were going to say anything different, I'd have expected you and I to have a conversation beforehand. So with this item, there's a recommendation that you deem the arrangements for a preparation. No, you don't. That you approve the rolling audit plan and you approve the signing of the audit charter. Those in favour of that, thank you very much. Thank you. We'll move then on to item 10. This is again, Rachel, this is the accounting policies and estimates, and again an interest for Grace here, I think.
Yes, thank you, Chair. So we're bringing an update on our progress to finalise and prepare the statutory accounts for 24-25. Year end is now 4.5 working days away. So we are holding fast until the year end, and then we will move into a period of activity to finalise those numbers and prepare the statements that will come to this committee in draft form, along with the annual governance statement at the meeting in June, I believe. As part of kind of best practice and good governance, we bring to you the accounting estimates and judgments that we make in the preparation of those statements, and that's at Appendix 2 to this report. Those are obviously subject to robust audit procedures, as highlighted by Grace earlier. There are no changes in the way that we are making those estimates and judgments in this financial year. We've also included at Appendix 1 our accounting policies. These are included in our statutory accounts. Historically, we might have included these as a kind of a bundle of 10-15 pages at the start of the documents. One of the changes that we made when we refreshed and simplified the statements a couple of years ago was to include that narrative explanation relative to each note against each note, so that the user of the accounts can look at the numbers and understand the accounting policy that we've applied within the same page. As Grace highlighted, there is one new accounting policy this year linked to the implementation of IFRS 16, which is a new accounting standard that was effective from the 1st of April 2024. And that has an impact on the way that we account for our leases and our right to use assets. We are on progress with the statutory accounts deadline. We're working to the deadline, our internal deadline of 31st of May. Those statutory national deadlines have now moved along with the audit backstop dates. But as Councillor Hitchin rightly pointed out earlier, it's good practice for us to be in that discipline of closing the accounts down, preparing the statements, working with auditors to go through that audit testing, to provide assurance at that key point in the year, just before we start budget setting. And it's not just because of the kind of the resource implication. I think there's real value in you having confirmation as Audit and Governance Committee, but also the wider members, of the accuracy of our financial reporting as we move in to ask you to place confidence in Cabinet around the build-up of the next year's revenue budget and capital programme.
This is where it can sometimes a little frustrating with some SMB, for example, or questioning numbers. We're saying they've been audited. You're not going to, I hate nothing derogatory, but a layman is not going to find something that 7 or 8 auditors haven't found. So we're not hiding anything in numbers. We prefer you to talk to us why we did things and why we came to that decision, things like that, rather than trying to get that number doesn't add up, or why does that come from there?
Rachel, what's the effect of this FRS 16 change on our accounts? And I suppose part of the question for Grace really is, what's behind it all? There's been a bit of a mischief in councils, and they're misstating their assets or liabilities. And
I think it's to recognise the assets that we have a right to use, as well as those ones that we have actual ownership of, isn't it? It's about enhanced reporting. Some people might say it's an increased disclosure. It gives the user of the accounts an indication of the resources that we have available to us to deliver our operations.
Balance sheet.
I mean, for us, it has minimal impact. We've been assessing the impact and the workload. We have been making inquiries and building up a data source. It doesn't have a material impact for the council, but we will of course comply with the regulation and relevant standards to make sure that we can. And actually, we've been providing information in recent years anyway to say that we've had to make a disclosure in our accounts to say that we're preparing for it, and we've had to confirm to auditors whether we expect it to have an impact or not. You will test whether we are right in our assessment of it not having a material impact, and the disclosures, and we'll present that in those draft statements, and probably a good idea for us to take you through that as a new disclosure
With an example,
when we get there.
we've got a leased asset, this does this, and this is how we used to treat it.
Yeah.
And all companies are having to wrestle with this.
Yeah.
It takes away the distinction between a finance and an operating lease. So obviously everything comes onto the balance sheet.
Think about photocopiers, for example.
Yeah.
And we've got some exemptions that we're allowed to apply, some low value assets, portfolio accounting, so that it's a practical response, whilst making sure that we're compliant with those disclosures.
I think that's why it's taken so long to get to ground, isn't it?
Yes, I said, I think it was 6 years ago in the commercial world, 2 years ago in the NHS, and it's finally caught up with us in local government. So yeah,
I used to hate the operating.
So there's basically no changes in previous stuff. It is pretty technical as far as I'm concerned, a lot of this.
But it's in confirming that there are no changes, we have still been through an exercise to confirm that those accounting policies are still appropriate. So it's not a copy and paste last year. There is an exercise to confirm, and audit will test that compliance to make sure that we're not just rolling things forward. We're assessing that they're still appropriate, particularly with those areas of estimation and judgment. And I know that you place a lot of kind of focus on those areas, because they are the you've highlighted those as a risk in your audit plan.
yeah. So the completeness of that disclosure is the key risk for us this year, in the first year that it's implemented, just to make sure that all of the leases that we would think should be included have been, and what management's process is to establish that over the couple of years that they've been preparing for it. So that's the key thing for us. If it's not material after that, then we probably won't do any further work on it.
So any committee members want further forward?
Yes, just one point on the final accounts. The auditors in the past have pointed out several instances of the accruals concept not being consistently applied, and the risk of misstatement in that respect. Do you think you've overcome this problem and can satisfy our auditors this time?
I don't think it's a control weakness. I think it's sometimes to do with the timing of those accruals. We close down within a very tight time frame, so inevitably there are some transactions that we don't always capture. From an accruals perspective, we have quite a lot of quality control around that. At the year end, there's an additional quality assurance piece for accruals above a certain value, and we have some additional controls around the evidence that's used to support those accruals. So we've, as always, when audit advises that we need to strengthen arrangements, we take that seriously, and we implement we design some new practices around that, and we will complete those as part of our close down activity this year.
So you think the auditors will be satisfied this time?
I'm confident the auditors will be satisfied. Am I confident they won't find anything? That's the big test, isn't it?
Yeah, thank you.
For the most September.
Okay. So no more questions. I'd ask the committee approve the rolling audit plan approach and also the signing of the audit charter. But that's the vote. All in favour of I moved on to the next one. I'm sorry, I'm going one back. So the recommendation deems the arrangements for the preparation of the 24-25 statutory accounts satisfactory and approves the accounting policies. Can I put that to the vote, please? All in favour? Thank you. And now item 11, update of risk management arrangements. I do think this is a really important thing for this group. Historically, I think the Audit Governance Committee has looked at the risk register, gone into some detail about it, and we're changing the new system. It's no longer going to the responsibility for us to look at the individual risks, but it quite clearly places, I think, more onus on the I was going to say the executive. That's not the right grade, but on the officers to look really carefully at what the risks are, and then for that to be approved very definitely by cabinet, and for both those two groups to review every 3 months, and then for the cabinet member and also the director to be looking really carefully at the risk register, and also because this will go to the risk register will eventually go to cabinet. That's the opportunity for group leaders to really question whether that risk register is appropriate. So we as councillors can provide input if we don't think that some risk is identified properly. This isn't the forum to do that, but it is through cabinet, and it's through the group leaders and their representations, or even asking written questions if we want to that cabinet meeting. And it brings it away from this committee that's looking at what the pipeline looks like, but what goes into it is what we can all look at. We all have a responsibility. I think this policy is saying it's not just, perhaps the feeling used to be it was the audit committee that was responsible for it, but it's not. It's a whole series of people, and all working together, we can just improve decision making, improve the quality of things which are done in the county. Sure.
So if I can just provide an update on the activity that's taken place since the last update that we brought you. And I think it's right to recognise the importance of this committee is to be assured of the effectiveness of the risk management arrangements. And you do that through a number of ways. You have to be satisfied that this strategy will lead to an effective framework, but also through the annual governance statement and the head of internal audit opinion. Those are the sources of assurance that are provided to you. The annual governance statement is a document that is aligned to the fit for good principles of governance, and one of those core principles is around risk management. So within that document specifically, we will highlight the actions that have been delivered in the year, and the arrangements in place, and that's for you to input at that point and determine whether the risk management arrangements are effective. This strategy coming to cabinet for approval does not limit this committee from reviewing risk. It's designed that if you consider the risk management arrangements not to be effective, you have an opportunity to input through that route. But since the meeting in January, we had our risk management workshop that very day. If you remember, with SWAP and their risk management experts. And prior to that, we had also engaged with our insurance and risk external providers to consider the strategy and the areas to strengthen the previous strategy. So we've now taken this strategy with a view to refreshing and to really strengthen and identify and report on the who, the what, and the how. So in doing that, one of the key changes and improvements to this strategy is the risk appetite statement. This was an area highlighted to us as best practice, and we were encouraged and facilitated through the workshop with SWAP to align that to those risks that prevent us from delivering the key priorities within the council plan. So it's a very Herefordshire Council document which enables it to have focus and make sure that we are managing those risks that are really important to our strategic objectives. So the risk appetite statement highlights each of those priorities, and they're aligned to the principles of the council plan: people, place, growth and transformation, but as well as some of those broader risks that the organisation faces: the legal risks, financial, governance, data, reputational. And within each of those core principles, we've identified what our risk appetite is. So, for example, our council plan talks about our desire to transform the organisation and to innovate. and therefore it's appropriate that our risk appetite matches that objective. We can't have a real desire and an impetus to transform if we're cautious about every decision we make in that area. So we've aligned those two principles, and that will flow through now into all decision making and our risk management framework. This strategy strengthens the roles and responsibilities and splits those between elected members and officers to highlight that risk owners are responsible and accountable for risk management activity, but also that all members, cabinet, corporate leadership team, the statutory officers, which includes myself, the monitoring officer, director of children's services and director of adult and social services, have those specific responsibilities in respect of managing our risks. In that risk appetite statement, one of the areas of best practice that SWAT pointed us to was within those council priorities, whilst we might have a broad risk appetite around our people council plan priority, it might also be appropriate to have an exception within that. So our risk appetite statement includes an exception around our statutory responsibility to support vulnerable adults and children. So we're saying in that respect, we're not open. We don't have an open risk appetite. We have a very cautious appetite because of the importance of that statutory obligation. And we'll continue to, as we live through this strategy, we'll continue to identify and align the risk appetite where we highlight those exceptions. Whilst we've refreshed the strategy and developed that risk appetite statement for the first time, that's not to say that risk management activity hasn't continued across the council. We have project level risk registers, service level risk registers and directorate level risk registers. This was about bringing together an approach and some collective ownership and to refresh the way that we now monitor and report those risks. So for 25-26, this strategy will now be, the refresh will be kind of delivered through those wider groups, through our leadership group and through risk owners. I've appointed a risk manager within my service, and risk now sits within the finance team. That risk manager is not responsible for managing all risks across the council. The risk manager is responsible for coordinating the approach, ensuring consistency in scoring and highlighting areas of best practice. And she will be responsible for pulling together those corporate reports and engaging with cabinet to share those risks across the organisation. But the responsibility for risk ownership, identifying mitigations and controls, and those risk appetite levels will be very much firmly sat with the risk owner. And I think that's a real strength in our approach. We have a leadership group training session planned to further embed these new kind of approaches to our risk management strategy. And I think that will be a real good opportunity to see this in practice. The proof is in the pudding now. We have a strategy. Does it work for the way that the organisation needs to manage its risks going forward?
Thanks, Rachel. Discussion, Mark.
Thank you. So risk owners seem pivotal to this process, and you've appointed a risk manager for the finance team to sort of corral them, to make sure coordinate,
Yeah.
but to make sure they respond in time, because there is there's a schedule, isn't there, to risk reporting, so that they have to produce their risk assessment, let's say, in accordance to the appetite and all this, that they feed that information back, or do they just enter it into the system and the risk manager can then see, oh, so-and-so's done it, so-and-so's, or do they have to go and visit these people in person, talk to the risk owners, educate them, keep them, are they more of a champion or are they just auditing?
Definitely not auditing, and part of their role is to champion risk activity across the organisation. But I think it comes back to the first part of your question around ownership. The risk owners are not preparing those risk registers and updating them because the risk manager needs them to. They're updating those risk registers as part of their BAU, their business as usual activity, because that's part of their role in managing a project or a service. We're not doing this to tick a box and say that it's done and so that the risk manager can prepare a report. It's got to be embedded in the way that we work. The risk manager will, because we need somebody in the organisation to coordinate that, but their role will very much be ensuring consistency. At the moment, the way the risk management framework works is we score a risk over here and this team score a risk over here. We need to make sure that they're scoring those risks consistently using the same risk appetite that we've set against those council priorities. So that championing, training, highlighting best practice, that will sit within the role of the risk manager. But the risk owners are accountable for managing
Sure.
those risks because that's part of their job descriptions and the way that they deliver services.
Okay, so would the risk owners be responsible for collecting and putting the figures, or are they responsible for making sure their team collects and puts in the figures, puts in the risk responses, the mitigation factors, the thresholds and all that sort of stuff?
I think I see that as, you know, the 10% of the risk management, the documenting, but it is very important. And the risk manager will ensure that we are recording consistently. So we're designing some new templates for how we will do that. And the risk owner will be responsible for inputting that data because I need to make sure that the risk manager isn't a data collector. They're adding
It's not a
value.
full-time job, is it? It's not their full-time job. It's
No, they're an insurance and risk manager. It's part of their role. But the main role is to challenge and to ensure that consistency. We don't currently have risk management software. That might be something that we consider, but I think the first step is to identify
So it's all on spreadsheets basically at the moment.
It is on spreadsheets. Those are in design at the moment to make sure that we've got something consistent and again that aligns back to this risk appetite statement and the council plan priority, so that we've got that golden thread through from a strategy appetite statement to actual on the ground risk management activity.
Thank you, because in my experience, it's great to have the champion, the risk manager, let's say, who is, and one of the other thing that you were mentioning with the auditing is someone consistent who's there year on year on year, who understands everybody, but also that the corporate structure, the corporate risks are consistent year on year. It must be terrible when a new administration comes in and decides, right, well, let's do something differently. Let's do something. Then you've got these 4-year lumps of, you know, when it comes to analysing risk, historically, you can't tell how things are affected because it keeps changing and they keep changing the structure of the directorate, or they keep changing the reporting system. But if there's some way of ensuring there's consistency, then you will get value from this. Otherwise, it's a bit like budgeting and accounts. If you can't compare current year to previous year, you can't tell what's getting better, what's getting worse. So with the risk appetite plan that you put in there, we won't know whether it's effective or not if we keep changing the underlying, sort of risk structures. Or whatever. So I suppose this will last until devolution, and that's as best that we can hope. It will be good for 2 or 3 years.
I think a strategy has a lifetime, and there's a period where it needs to be reviewed, and this will be reviewed annually to make sure that the appetite remains the same, and to make sure that the strategic risks, we don't expect those to stay the same because the organisation is transforming and evolving, and there are new risks that might emerge, and we've got to be agile, and it's a live document. I think the danger with risk management is we say we've got the strategy now, we've got the template, we've done a risk register,
It's fixed.
in the drawer it goes. It's about it being a living, breathing document, and how we monitor and report on that, I think is really important. As you said, how are we demonstrating that we are managing or accepting those risks?
But also showing the risk owners and all these people who are doing the work that there is value to it for them.
Yeah.
Because then they'll carry on putting it in. Otherwise, if they just think, like you say, just ticking a box, they'll just get annoyed and it won't.
But the other benefit of the risk manager, a dedicated risk manager, is oversight across all directorate risks. So if we see a common theme emerging around, say, risk around governance that each directorate is managing, there's an opportunity then to say, this is a theme, does this need to be considered at a different level? What I would also say is we've reviewed now the corporate risk register. Historically, that's been quite a long document, probably hasn't been refreshed for a number of years. And we've been working with Councillor Stoddart and through CLT and wider cabinet members. And that's now a leaner document, not because we don't want to manage lots of risks, but we need to make sure that particular document, they really are the corporate risks and the strategic risks that we are managing, that threaten the delivery of the council plan objectives.
Right.
And of course, everyone's got a senior responsible officer, the SRO, who owns that risk, and he or she is then accountable to the cabinet.
I've got some points. I just want to make a couple of points, then we'll go back to anybody else who's got any questions. So there's on the page 3, clause 3.4 talks about elected members and their role. So there's the leader of the council and the cabinet, and audit and government. Third is all elected members. And I suppose, Peter and Rachel, this is the context of this is we're not here to approve this document. That's not what we asked. It's just comments that we might have, which we might want you to take away and just think to improve. So all elected members that have responsibility to understand the council's risk management arrangements. How on earth are we going to get 53 councillors to do this? So it's an open question. I read this and I think that's just not going to happen, because to corral all 53, there are different levels of interest. If you are saying it is going to be achieved, how is that going to be achieved? And if I can add another dimension, which is if we took an intermediate stage between the political leadership and the 53 members, we've got scrutiny committee in between. So what is the role of scrutiny committee in all this? And I'm thinking that the scrutiny, we don't look at the detailed risk, but that's something that scrutiny to do. And I would want to make sure that scrutiny in their annual programme, they made sure they were looking at the corporate risks. So they could satisfy themselves that, you know, they're being properly covered in their particular area. And they might say, you know, it's covered, we don't have to worry about it. But in other areas, they may say, oh no, we want to drill down in that. So is it a sort of halfway house to add actually a bit which says scrutiny committee and this is its role? And that's an open kind of question for.
I think a fair few questions in there, in that one question there. So we've got in here, all members have a responsibility to understand the council's risk management arrangements. How do we do that is a challenge, in the same way that all members have a responsibility to understand the financial position.
Corporate parenting, we're all corporate parents. Yes, that's the one example, I think.
That we will work with our colleagues in democratic services, and my preference would be that this forms part of the member training offer. You know, we do a lot of training and sharing of information from a finance perspective. And you've highlighted already the importance of risk management arrangements. And I think importantly, the decision reports that come to full council or cabinet, each includes a section called risk implications. We have a legal implications, resource implications, risk implications. And as part of our refresh of that risk management activity, we will refresh the requirement to identify and confirm what those particular risk implications to each decision are. So I think there's an opportunity to say, hey, we've refreshed our risk management strategy, all members, and we'll work with democratic services to enable that. But also there's there's that regular narrative around risk management through decision reports. And in terms of the role of scrutiny and internal audit, the internal audit plan is a risk-based plan, and it will very much be informed by a review of the corporate risk register, directorate risk register, service level risk register. And my expectation is that Scrutiny Management Board's work programme would be similarly informed by a review of those risk management risk registers, to make sure that they are aligning their work to those risks across the organisation. So we would share that with Scrutiny Management Board and work with them. And one of the other things that Amy and I are working on is this risk assurance piece to demonstrate across all of those risks what your source of assurance is. Is it external audit? Is it internal audit? Is there a task and finish group that Scrutiny Management Board have put together that will do a piece of work on that specific risk? Is it through a project board, etc.? So I think that will be a valuable tool.
Yeah.
Open to any suggestions as to how we might get to members.
Well, it's a matter of how is that coordinated in this, so that in 2 or 3 years' time this conversation might have been forgotten about, and it just gets lost. Is it worth? And it's only just the idea: is it worth putting something in here, which explains the need to work with members and how that's happened and how it's working with scrutiny and eternal. I just leave it.
Possibly an entry in the strategy, but certainly when this comes to cabinet for approval, I think some information in that cabinet report to highlight how we might engage with members to share this information. I think that's also an opportunity to do it, to be held to account.
I think according to the Constitution, in any 4-year term, there is mandatory training for councillors in the 3rd year, and if they don't complete it, their allowance goes down to 75%. Just have a training session. That might be a powerful incentive to turn up for everybody, all 53 members.
Yes, yes.
I'm sure it wouldn't take more than half an hour, surely. An hour.
And I know that John Coleman has worked recently with a kind of a survey that some of you might have completed around kind of assessing those needs for training, and that will be used to kind of design a training program. And it might not be necessarily everything you want. We might throw some things in that we want you to know as well.
Okay. So Jen, your minute something about.
Yeah, I mean, the members development working group are who determine what's in your mandatory training. So yeah, I'll put an action.
I have some more. Frank?
I'd like to just mention planning, really, because planning being one of those issues where if a planning application goes through on appeal, as I understand it, the council would then have to pay the appeal. I don't know how much of that's true. I'm just going back to a planning meeting where I was not co-opted on, studying for an officer, and I did not like the attitude of the person that put in the planning application, because he quoted a previous plan and said, well, even if you don't approve it, we'll get it through on appeal. And I thought, well, that's rather an arrogant attitude, but that I then got a balance. If he's going to get it through on appeal, it's going to cost the council, ratepayers, money. On the other hand, that arrogant attitude, I couldn't condone it. So I knew he would get through anyway on the day, but I wouldn't vote for it. I would have stood against it. And I'm looking at some other issues where already as a councillor, I've gone down the route of approving an application because I've been told that it'll go through on appeal, whether you say yes or no. But that's generally been by a planning officer. How much of that risk is taken into account? Because obviously, if a wrong planning decision is made, there's a risk to what it was going to cost. Now, can you do that within the risks?
So I think within the planning service level risk register, I would expect to see that as a risk, the risk of appeal, and the related legal and financial risks associated with that. So I would absolutely expect that to be included in that service level risk register, with an action identified against it, or a plan to control that.
Did you work out a percentage? Planning applications come in, you work out a percentage of what that would cost?
Not in the detail at that level, but I would expect us to be able to quantify the financial risk where we've identified one, and then to give a proportionate response to it.
Covers the impacts. So under financial, would it be small, a couple £100, medium, maybe a few £1,000? So that would be there, so that whoever's making the assessment has a reference document to go to. It's not just something he or she will pull from the ether. It's actually the
scoring risk.
The scoring of that risk.
That risk would be there'd be some guidance around why that risk could be scored, and the response and the control would be proportionate to the level of risk identified.
Thank you. Robert?
Yeah, just wanted to comment, because the changing landscape, the new government's got different policies. This has changed a lot of things, and you mentioned planning. The way the rules now of the game are, there are planning applications where I've got one, for example, where 66 different households are objecting. Now, I'm a politician, unfortunately, and so I'm gonna have to take this to planning committee when it's approved, despite their objections, and it will be because the new rules of the game. We take it into account, and that, of course, then eventually may go to appeal. It depends how it goes on planning committee. But I've got no choice really. But when 60 odd of my parishioners say we're absolutely opposed to this, what else can I do? But even though I think it's probably going to go through, and that's a risk now that we've got because of the changing game. They've driven a coach and horses through the planning regulations, the new government, and so there are going to be a lot more objections. Plus, there's going to be speculative applications for development because of the new assumptions of saying yes. That's a big risk area now of cost to the council.
I think we've got to separate a risk and an issue.
Yeah.
And I think that's an issue. And a challenge that we need to overcome, as we would with any change in legislation. I think we've got to think it through and what is the risk to the council, and the risk would be there's a financial risk or a reputational risk or a resource risk that we need to apply, or a risk that we're not compliant with legislation.
So the general model of the changes that the new government has brought in, I mean, is that now being taken into account when we're analysing the risks of things? Because for that sort of situation I described, there is a reputational, a financial, social risk to the changes that are happening. I mean, is that being taken into account generally because the rules of the game have changed in some areas?
I think again in those lower level service risk registers, those would absolutely be the kind of considerations that we would expect those risk owners to be thinking about in the way that they build those service risk registers.
Yeah, okay.
Okay. I want to throw in a broader issue, if I may. So we have a council plan, and the previous administration had a county plan. Quite deliberately a county plan because we felt that we had a responsibility towards the county as a whole. I mean, concerns there. So whereas the council plan was all about protecting the council, and it's very inward looking. Whereas we saw something which was more.
Oh, I'm going to object to that.
No, hang on. Yeah, so this plan now, the risks are only about council risks, not about county risks.
The council plan is a plan for the county. It's the council plan for the county.
My concern is that does this actually look at risk to the broader county, which might be, yeah, I know we've already had a chat about this, but I wanted to air it just so that the whole committee have a chance to sort of think about it. So there's things like, another coronavirus or something like that, which might not affect the council, but it actually is a big risk to the county. Phosphates, high level of phosphates in the waters, that's an issue for the county. All sorts of things like that. So this concentrates very much on council rather than county. And I'm just wondering how are issues which are county-wide, how are they covered? Because I felt we should be filling that space as a cabinet. For the county to lead the county rather than just be leading the council. So Rachel, I know you have.
I think firstly the risk strategy focuses on the risk areas that we are responsible for as a council in our day-to-day operations. The risk appetite matrix, which is kind of the core of this document and drives all of the activity that sits underneath it, is aligned to the priorities of the council plan, which and I'm not getting into the politics of it, but whilst there has been a change in name, the strategic priorities across people, place, growth and transformation are in some instances bigger than the confines of the council's operation, because our commitment to growth requires us to engage with partners through our skills strategy. Our commitment to people requires us to engage with health partners across the council. So in delivering that strategic objective, there is a link in with our local partners. Separately, there is also the Local Resilience Forum, which has a risk register, and we are represented on that by the Director of Public Health. So we have that engagement in those wider county risks. So you gave the example of an infectious disease, or another pandemic, that would be coordinated, and those risks at that higher level. And I think, if we think about devolution and a strategic mayoral authority, it's appropriate as those risks become the concern of more than one partner, that there's a separate opportunity to record those and the collective responsibilities and actions that we would mitigate that particular risk with. So it's not that this ignores our role in the county, it's that this document focuses our activity on the risks that we're responsible for, but also those aligned to those council plan priorities, which I think are bigger than the council.
Okay, but so if I may, sorry, Chair, by responsible for, do you mean they're risks that the council can implement mitigations for directly and be responsible for executing those mitigations?
I think so, because otherwise
we
we
can
would,
take action
we could manage, we could manage risks nationally. We could have them on the risk register just to say we are thinking about them, but this is specifically to focus our risk management activity on those elements that we are responsible for.
And can address, yeah.
And to go back to the discussions that we had around about this time last year, we were talking about the council plan. We spoke with SMB and many others and said, it's our plan for the county, but it can't cover everything, because you've got the ICB, you do the health, you've got but we engage with these people and we're aware of them.
Yeah.
And if something came up as an issue, we deal with it. In fact, we were sitting in this room last Thursday, had a brief from Wyvella Trust on the critical care incident that happened in January. So we'll work with them, but they're outside of our immediate control. What we've put in the council plan is the bits that we control without any other debate. We can discuss and deal.
For the whole county.
Yes, for the whole county, yeah.
I mean, when we talk about people, Rachel's referred, I was talking about the council employees or the councillors.
We've got 183,000.
185,000 people in the county. You've completely misrepresented what that says for political reasons, and I object to that.
No, but you're absolutely right. If the government make a change in the armed forces like they did in Staffordshire, the risk that the armed forces leaves Herefordshire is not something we can control, but obviously is a risk to the county, but shouldn't be on our risk register. And that's the difference. You got to use that.
It's a risk to the council specifically.
Yes.
And that was the decision that we took as the cabinet last year, based on what we found speaking to the population on the doorsteps in April and May, in March and April 2023.
And this came up in clear focus yesterday in the Environment Scrutiny Committee, where we talked about the commitment to net zero. And we have a commitment for the council itself, and we have a commitment for the county. Now, for the council itself, we have a very large amount of control about what we do to achieve net zero. For the county as a whole, we have very limited ability to affect that, and we depend on lots of other outside agencies. So our confidence about the achievement is much lower because we can't control it all. But for the council itself, our confidence is reasonably high because we can, and that's the difference.
The risk register must be real and consist of things that we can worry about and impact in the short, medium and long term. Otherwise, we'll be having to put Trump's decisions on tariffs, because there are loads of businesses in this county who are worried about those tariffs and the impact of what's going on in the States. But that's not something that we can put on our risk register.
It's an issue, as
issue.
Rachel said, but it's
got to be stuff that we can worry about and impact to make decisions about.
And one of the main things in the corporate register is, as Rachel alluded to much earlier on this afternoon, DSG. That is one of our number one things that we control. And we're taking mitigation actions and lots of other collaborative actions to do that. And that's the sort of items that sit on our corporate, the top level risk register that we're managing.
Yeah.
Okay. Does anybody else have a view?
Yeah, well, I see the biggest risk to us as not being able to reach our housing targets. We've got, we're spending vast amounts of money on housing people in hotels. And we don't seem to be able to, reach a level of about 700 houses across the whole of the county. We really need to be building at least 1,000 a year across the county.
I'm sure that'll be on the risk register.
It's a risk we're monitoring, but I think in terms of, to come back to the role of this committee, what we're trying to provide assurance of through this document and other resources is that there are effective arrangements in place.
Yeah.
In terms of the specific risks within a corporate risk register, directorate risk register or service or project risk register, it's a control we're offering you. We're offering you the control of the strategy and the framework, and for you to receive assurance from the effectiveness of those arrangements rather than challenge the specifics of the scoring of an
So
individual
obviously,
risk.
for example, housing sits under place. So what we've said here is our risk appetite is open. So we're innovative, pioneering its commitment. So that's tied along the lines of we are more risk, we're happy for more risk to get these things done.
Yeah.
Whereas if we were against it, we'd be across in the adverse column and we'd be locking down tight.
Yeah.
So our
that-
decision making will be informed by that risk appetite. So for housing, for example, because we recognise that it is a risk and an activity would have a significant impact both for residents and our financial position, we're more likely to have an open appetite when we're making that decision around an opportunity.
As you see, most of them are either in the open or the cautious column with one or two in the adverse, but none in the eager. But, and again, this is the strategy that you guys are approving and agreeing with that we'll then.
We were agreeing
endorse.
250 social housing a year target.
Well, that's not what we're saying by having a risk appetite that's open.
Yeah.
We don't want to have 250. We want to have 17,000 over the next 30 years.
Yeah. Yes, it's not achievable though, is it? It's not the builders or the building materials.
So my next question, just for thinking about, is in here. There's under the monitoring and update, for instance, I'd expect someone to say how regularly it's to be monitored. And so I'd expect somebody to say, there will be a quarterly review. But I think it's in the covering paper, it's not actually in the strategic document. And I'd like to see as much as possible whether let's do things within a particular timescale.
Yeah,
Actually,
we can feedback away.
the document.
I think for me, what sits underneath this is a more detailed framework, which is the specific activity. But absolutely, I think we can take that away as feedback and incorporate that frequency
Valid point.
and timing. Yeah.
Appendix B, risk appetite. I mean, you're going to explain a note somewhere where the yellow is what's food.
Yeah, we've omitted that, but I recognise it's absolutely important for us to highlight that the yellow colour represents the risk appetite that we have opted for within each risk category.
The blue one, just again, it's in an openness to just whether the wording is quite appropriate. So it says the council will continually seek to achieve activities that present a threat to the safety of the public and will do everything to prevent the loss of life. Now, there will be loss of life. And I think in terms of road traffic accidents, we are the Highways Authority. There will be road accidents. So that we say we'll do everything to prevent this. Is that too strong to say that we'll do everything? Might that come and bite us? And does that need some sort of qualification? It's
Something reasonable?
Within that, yeah, we can take that away.
I mean, if we want to eradicate traffic accidents, we'd go back to the red flag and the 4 mile per hour limit.
Yeah.
There would never be any
Yeah,
accidents.
so we don't, and that's not the proposal, is it? So
No, I'm saying, it's a risk appetite. There has to be a certain amount of appetite and a risk that we're willing to accept.
But I think we're doing everything, we'll do everything possible.
we don't have to draft it here. It's just a matter of,
I think we're committed to preventing the loss of life.
yeah.
Whether that's too vague. I think we'll take that away and think about the wording of that sentence.
Okay, I think I've stirred enough. Anybody else want to, any other comments?
Helpful feedback.
Well,
I think
well,
it's how
yes.
it will be minuted.
Just hope that we just clarified the fact that there's risk that we identify, and then a risk appetite is a different thing, and hopefully everybody understands. It differs from field to field, depending on, as Peter said, how much we want to, how important it is to try and achieve something, we have to accept a little bit higher risk.
Yeah.
So just as long as everybody who maybe is gonna watch this on YouTube understands that risk and risk appetite are related, but they're different things.
And this paper obviously goes to cabinet and gets approved by cabinet. It doesn't go to the full council, I don't think. It's and this committee certainly isn't saying, you know, we approve this. We've got some comments and it's a framework.
And we appreciate that. That's the reason for coming to you, so we get a better document to go to cabinet.
And you have been instrumental in, you know, encouraging this through the
Absolutely.
process.
Yes,
And
absolutely right.
I think whilst you're not approving it, if you're not assured by this
Yeah.
strategy or the activity that sits underneath it,
Yeah.
then it's absolutely appropriate for you to highlight areas where you think it could be strengthened or improved. And we would take that feedback and go away and improve and strengthen.
Well, I'm just encouraged that it seems that almost this committee used to be where it's at, and it's now actually a much broader, a much better, and under the constitution, we shouldn't have been looking at it. We're just looking at the pipe to make sure it's fit for purpose.
But the other thing,
Go on, Aubrey.
have we fully looked at the ageing population risk and the social services of ageing pensioners like myself living far too long and needing council care well into their 90s? I mean, we are an ageing population here, so it must be expanding each year, the cost of social care.
Okay, Aubrey, I don't think that's for this committee.
Risk, but it's included in the budget and the
Yeah.
MTFS, as well as, you know, managed through the risk registers where it's relevant to the delivery of that council plan priority around
But
people.
to address your point, yes, it is a risk and we manage it, and we watch it, but it does bring a benefit because it comes with we attract wealthy individuals as well. So it does help.
Wealthy retirees who move to the county, you mean? Yeah.
Healthy one.
Thank you, Chair. So for me, that one of the most valuable bits of this document is at 3.4, the table showing elected members and role and responsibilities. So those responsibilities, they're going to be advertised to all the relevant groups, yes? So everyone's going to get to see their responsibility. And as you were saying, it says all elected members, so we'll see that statement, as it were, will go out to everybody. If anything changes in these responsibilities, who makes a decision to change the responsibilities and how do we get to know?
I mean, some of these are written in the constitution, in terms of the leader and the cabinet and the audit and governance committee. So that would require a constitutional change,
right.
which you would find out about.
Okay.
Just want to point out that these aren't new responsibilities.
Yeah.
We've not decided that all of a sudden you're responsible because we've written a strategy. These are existing responsibilities. So this is a reminder and a focus and a bringing together in this document.
Okay.
But the leader has always been responsible. Audit and governance have always been responsible
Yes,
for
yeah.
effective risk management arrangements. You're absolutely right. The key to an effective strategy is not writing it and putting it in the drawer. It's making sure that everybody is aware of their responsibilities, and that will be done through that member engagement, through corporate leadership team, through leadership group, through job descriptions, and through that wider training through the risk manager.
Yeah.
I think some of it comes through the reports that go to council, which has a risk section. It's always frustrated me how poorly they've been written in the past. Well, that's an opportunity for every single member to read it and say, is that right? I mean, does it read right?
To challenge the risk appetite or the risk scoring, or the completeness of the risk implications that we've included in that decision.
We have at cabinet quite a few group leaders raise issues on the risks that are in some of the papers we present.
So, and if there's any changes to, like you've got here, the Director of Finance yourself, Monitoring Officer, Director of Children's Services, Director of Audit Social Services, you've actually named the different directors.
Because those statutory posts.
Those are
statutory
all in the
responsibility.
job description, they're in the job description, as it were.
Yeah.
That is, right,
Yeah,
okay.
so that's why those posts are named within this strategy. And for example, the Director of Economy and Environment is not a statutory post within the council. So there are no specific risk responsibilities that are linked to that statutory role, but there are specific responsibilities in his capacity as Director of Economy and Environment, as SRO on leading projects and as a member of the corporate leadership team.
No, that's important, Mark, because those statutory posts have statutory powers. In some cases, powers over us elected councillors. I mean, Rachel could say, no, you can't spend that money.
And to the Chief Exec as well.
Exactly. So I mean, that's why they're important to be identified, as because they've got specific legal powers that they can use in the running of the council.
Okay. So, no, that's good. We'll have some notes and we'll look forward to the cabinet meeting and the final vote. Very good. Yeah. So finally, the work.
Mr. Chairman, are you going to write formally to the Director of Finance, the Cabinet member, the leader about training for members on risk management?
I think you've noted it.
Yeah, I've got as an action. I'll speak to John, who does the members.
That I bring to cabinet will mention that should be now updated into the induction package.
You can give us all a copy of the Orange Book.
So much.
There's a responsibility.
So we can afford to print for everybody, but
So Chris, are you actually suggesting that we should minute or should have recommend to?
I'm suggesting that
I
the
don't think-
committee seems to be going along with that idea of making it mandatory training for all councillors on
Okay,
this.
so we'd like to make a recommendation, which is that there should be mandatory training in the area of risk.
Or recommend to the, was it to the
It's the members development working
development
group
group?
that decides which is the mandatory group. So you can make a recommendation that the members development working group look into applying that as a mandatory course. We can apply it as a
It
course.
doesn't have to be to that group, does it? I'm not sure.
They develop all our training.
Yeah, that they actually decide.
Delegated to do
I've
that.
sat on the members development working group, and it is them that decides which of those.
I don't think you're better to write to the chief executive or the leader to say, look, this is what we want. Chris, what do you?
Right to all of them.
Well, no, I'm suggesting we don't write. We don't need to write. We're just recommending to. So it could be recommending to the leader, to the chief executive,
I
to this training
suggest
group.
you make a recommendation to the members development working group that it's included in your overall training and it's made mandatory for all councillors.
Feel that will disappear into the fog.
The whole lot, and then they might all collectively decide this committee thinks it important.
Yeah.
All of them.
Right to them all.
Yeah. That's my proposal.
Okay, thank you. Do we have a second for that proposal?
Yeah.
Okay, good. All in favour? Okay, thank you. So it's to all of them. Okay. So, work programme. This is quite a quick item, I would hope. So it's looking at the work programme for the next meeting, which is in June. So I have the draft accounts, corporate risk registers, internal audit report, external, and draft annual report to the Audit and Governance Committee. So quite a lot on that meeting.
corporate risk registers won't come to the committee because they will now go to cabinet as part of the reporting.
Yeah.
Diane?
We're going to get the 2023-24 draft accounts, are we? In 10th of June.
It should be 24.
Oh,
Yeah.
apologies.
Okay, yeah, change that.
Can we have biannual opinion in the June one as well? Is that okay? It's not there.
Yes, yeah.
Thank you.
Sounds good, yeah.
And then you just got the dates of future meetings, Chair. So there's a list there.
Yeah,
If you wanted to just members take that away.
yeah, and only 6 meetings. I think we've had a few more in the past, so it's.
We'll probably need to know.
You think I need another one?
Possibly.
Yeah, because June.
And I think just to, if I may, a quick discussion maybe with Grace around that September meeting, whether that's too early. There's no statutory deadline. Well, there is a statutory deadline, which is February.
Yeah. we don't wanna go
But
through-
our preference is to land before the end of September, as in previous years, but whether that's too early within September and we favour a week later.
Yeah, I think.
Or later in that week. We could have a
Probably,
discussion
yeah.
outside the room on
Yeah, okay, yeah.
what those dates could be coordinated with
Thank
yourselves.
you.
Yeah, and members to see availability. And if we can work on that.
That's fine.
Okay. Anybody else want to add anything? Jen, do you have any idea of the sort of forward plan, looking what we might do July, September?
I have got a forward plan. I can circulate that outside, and also I need to
To know.
speak with internal and external to see if they want to make any amendments to it, but I have got a forward plan ready to go.
Yeah, because there are lots of set things, aren't there? We need to look at a particular.
That's things that run 6 monthly or annually.
That'd be good. Okay. So go to the next meeting is the 10th of June. Thank you for everyone's attendance. Please can the recording be stopped?